So should you be taking out a loan on your 401k? Is it worth it or not? That's what we're going to be discussing today, so stay tuned. Hey there, I'm Tomy Boboy, your credit and personal finance coach. If this is your first time on my channel, I'd love to just say welcome. Typically on this channel, I'm going to be talking about things related to credit or personal finance. So if you're interested in improving your credit or achieving financial freedom, then be sure you hit the subscribe button so you don't miss any of my future videos. Now, recently I was on YouTube and ended up going down a YouTube dark hole. You know, one of those days where you're just watching YouTube video after YouTube video. You just keep clicking in and clicking in. And eventually I ended up on a video where I saw a YouTube comment that was specifically asking about whether they should take out a loan on their 401k. Immediately, I decided to respond to that comment on what my points of view were, and it actually sparked in my mind an idea for me to just shoot a video to break down exactly to everyone else what I thought about that topic. Now, the idea behind the concept is this. Let's say, for example, that you needed a loan, for example, for a house, to get a down payment for a house purchase you wanted to do, or maybe you just wanted to get out some money. You were thinking about getting a personal loan so you could do some renovations on a house, or even to buy a car or whatever it is, right? So basically just for some sort of expenses. Typically what you would do is you would go get a personal loan, and through the personal loan, you would be able to take care of whatever you needed to, and then you would pay back that personal loan in installments, right? Every month you would be making payments, and you would have to pay a little interest above the amount that you borrowed, right? That's how it typically works. The idea with a loan on a 401k is instead of you borrowing money from a bank, you are essentially borrowing money from yourself through your 401k, right? And for those of you guys who haven't heard of a 401k before, it's just a retirement plan that you are contributing to through your employer, right? And typically they'll do some sort of matching contribution. That's normally how they do it at all the most majority of companies. And so it's like you and your employer are both working towards your retirement. So exactly how does this work? Now, first off, I do want to say that it really depends on whether your employer even allows this plan to begin with. What you'd have to do is you'd have to go to what's called your plan administrator. Pretty much all that means is wherever your 401k is kept, typically you don't access it through your company website. Maybe your company has a special website that you have to go into to be able to see what kind of investments you have and things like that. On that website, there might be a number for you to call, or you might be able to find that information online. And typically it's based on them whether you're even allowed to do this to begin with, right? So either they work something out through your employer, getting permission for you to be able to do that, or your employer just pretty much takes whatever features that plan administrator allows. So that's the first thing you want to do is you want to go and make sure that you even have this option to begin with. Now, the way this works is you're typically going to be able to borrow anywhere from $10,000 to $50,000 from your plan. So they don't let you take out the full amount. I think it's up to 50% of however much money you have in there. But again, guys, that's kind of like the benchmark. You really want to go to your plan administrator to see exactly what kind of rules they have set for you. Now, when it comes to the interest rate, and this is really the part of this whole concept that people find the most interesting, right? The idea is that there's an interest rate that is charged, right? And again, the interest rate depends on the plan administrator, but whatever that interest rate is, that money is almost like you're paying yourself, right? Instead of you taking out a loan from a bank and you paying the bank interest, now you're taking out a loan from yourself through your retirement account, and you will be paying yourself interest as you're making those monthly payments to pay back the loan back into that retirement account. And that kind of rolls perfectly into the next part I want to talk about is the benefits, right? The benefits is, one, you get to charge yourself an interest rate. That's one of the main things that when people are talking about this, that's one of the things they really like to tout is that you get to charge yourself whatever percentage of interest. So instead of interest that you would have been giving to a bank on like a personal loan, you are now able to give that interest directly to yourself. So you're able to pay yourself on the money you're borrowing as opposed to having to pay, giving that profit to somebody else. Another thing people like about the 401k loan is that you're also able to do it without a credit check, right? A lot of people tried to get a loan, let's say a personal loan, and maybe their credit score is not at a good place, where they're not going to get approved or they're not able to get approved for an actual loan. So by you actually loaning out money to yourself, you can kind of bypass the whole credit check system and be able to make sure that you have the money you need for whatever your expenses are. So for those of you guys who are in that situation, I actually shot a video breaking down exactly how to go about raising your score as fast as possible. I'll link it down below. It kind of tells you step by step what things you can do to be able to raise your score, and even gives you a breakdown of how the score is calculated to give you a little more idea how they get this number that is so critical for every aspect of your life. Now, so the downsides. What are the actual downsides to getting a 401k loan? One of the main things I always touch on is fees. I used to work in the financial services industry, so I know kind of how it is. Anytime that you're doing anything in financial services, one thing I always tell you to look out for is fees, right? Whether you're going to get charged fees and how those fees are going to come about. The issue with the 401k is that so many people have 401ks, yet so many people don't really understand what's happening in their 401ks. You know, back in the day, and it still really happens nowadays, a lot of people were getting their money in their 401k added to random mutual funds that were charging fees. So it would end up to where whenever you finally decided to retire, you might have a large sum of money, but if you actually did the math, you would realize that you lost 30%, 40% of the money that you should have had in your 401k just by paying fees to all these mutual fund companies and just random assortment of the fees, even paying fees to the actual company, the plan administrator for your 401k, things like that. So I always try to tell people, make sure that you know what the fees are. So even with the 401k loan, you want to actually get on the phone with a plan administrator, a customer representative from the plan administrator company, so you know exactly if they're going to charge you any type of fees, just so you make sure that everything is on the up and up. Another downside, and again, this one is going to depend especially on what kind of plan or how your 401k is set up, but a lot of the times they don't even let you continue making contributions if you've taken a loan out on your 401k. Right? And that has two effects on you. One, you are no longer growing your savings. You're no longer saving for retirement because they no longer allow you to contribute. But the other negative is typically at your company, they will more than likely offer an employer match, right? So it'll be something like maybe they'll match you 1-for-1 or whatever up to a certain point. So maybe they'll match up to 2% or 3% of your income, whatever it is. You won't be able to gain that matching, the employer matching, where your employer was actually putting money as well as you were. So now you've lost that option because you've taken that 401k loan. And again, guys, just kind of like I said previously with the fees, it might not sound like a large amount whenever you look at the numbers, but in the long term, it can have a huge effect on what you end up with, what your nest egg ends up with at the end. And the final downside, which for me, I think is the biggest downside, is the opportunity cost. You know, a lot of people aren't really thinking about it, but you got to look at it in terms of, you know, if your money is being used or being loaned out. So if you're loaning money out to yourself, think about what that money could have been doing instead of being used by you to renovate your house or get a new car, whatever it is. That money would have been invested in the stock market, right? So now, not only yes, you may be paying yourself interest of 2% or 3%, whatever the interest rate is, but you got to keep in mind that your money would have been in the stock market. So it would have been gaining money as well, right? So if the interest rate isn't more than what you would have gained, what your money would have gained while you were in the stock market, then that's whenever it's essentially you're losing money. And so that's pretty much it for the pros and cons. Now, in terms of what my thoughts are on it, the way I look at it is, guys, this should be the last resort, as in there is nothing else that you can do. You need this money, it's do or die. Then that's whenever you might want to take out this money. But honestly, guys, I wouldn't do it if I didn't have to. The way I look at it is it's rarely worth it, at least from my point of view. The money that you end up taking out and using, even though they make it sound good by saying you're paying yourself interest, you know, so it's kind of like your own bank and so on and so forth. You got to look at it from the opportunity cost standpoint that I mentioned in the final downside, right? Because if you are using this money, you are no longer making gains in the stock market, right? I think is the biggest issue. It makes more sense for you to go out and get a personal loan and pay interest on a personal loan than take out your own money that would have been getting bigger returns in the stock market. So I even went ahead and looked up some stats. If you actually look at the previous 5 years of the stock market's performance, it ended up averaging about 10% year over year. Now, unless you think that you're going to be able to not find a loan cheaper, that's a personal loan that is cheaper than 10% interest rate, then it might make sense for you to use a 401k loan. But typically you're going to be able to find a loan for a lot cheaper than that. And if I'm looking at personal loans and I see that I can get a personal loan for 5%, it would make sense for me to get that personal loan for 5% because I know that I could keep my money in my 401k invested in the stock market and be able to pull in 10% a year off of my 401k, right? So whenever you're hearing it from that perspective, it just makes more sense for you to not even take that money out. And I think that's what a lot of people have realized. One thing I've noticed is in financial services, they're always finding new ways for you to be able to seem like you're winning or you're making money or you're taking advantage of the system when really it's just ways for the banks to be able to just get more money out of you. You know, like I've heard things like reverse mortgages, whatever the case may be, right? Universal life insurance, all these different terms that the average person is not going to understand, but they make it sound good just so you can end up putting your money into it or finding a way to use that technique and they can make money on the back end. Okay, so I think this is just one of those other instances. I think for probably a good 99% of Americans, this isn't worth it. So I just recommend you not even bother touching it. And that's pretty much the end of it, guys. I think that you shouldn't even bother with the 401k loan. I think it's probably best for you to just go get a personal loan, especially if you work out the numbers and it looks like it doesn't make sense. But you just want to make sure, especially with this video, I wanted to make sure that you know the actual downsides of you trying to take advantage of a 401k loan. But that's going to be pretty much it. Now, guys, if you enjoyed this video, be sure to hit the like button so this video goes out to more people. And be sure to hit the subscribe button down below as well so you won't miss any of my future videos. Anyways, guys, that's going to be it for this video. I'll see you at the next one.